Hello, welcome to Global View on this Thursday. I'm Andrew Gagan. Good to have you with us here again at AusBiz. Let's check what happened overnight. Global equities mostly higher, bond yields in the US dollar also rising as markets continued to digest the easing of trade tensions between the US and China. Now on Wall Street, stocks were mixed with the Nasdaq, the best performing index, with the mega cap growth stocks leading the way. Nvidia shares, they rose along with AMD and Qualcomm as they announced artificial intelligence deals in the Middle East as US President Donald Trump secured $600 billion in commitments from Saudi Arabia to US companies during a tour of the Gulf states. They struck deals with Humane, a AI startup launched by Saudi Arabia's sovereign wealth fund. AMD also approved a $6 billion share buyback program. AI server maker Supermicro computer shares, they surged at the same time. And Boeing shares were on the move after the state carrier Qatar signed a deal to purchase jets from the US aircraft manufacturer during Trump's visit to Doha. Cisco Systems raised its annual results forecast, betting on steady demand from cloud customers for its networking equipment driven by the AI boom. And in the retail space, American Eagle Outfitters, those shares sank after the apparel company withdrew its annual forecast, citing tariff-fueled economic uncertainty. While in London, Burberry shares surged after the British luxury brand announced plans to shed around a fifth of its global workforce to cut costs to help revive its performance. Well, FOMC member Austin Goolsbee has urged patience, saying we're still kind of holding our breath in relation to economic data. You can go into some of the paralysis, but it still takes some time for that to show up in the numbers. While Fed Vice Chair Philip Jefferson has said the recent inflation data points to continued progress towards meeting the central bank's 2% inflation goal, but the outlook is now uncertain due to the possibility the new import taxes will drive prices higher. Meanwhile, US Congress has advanced elements of President Trump's budget package approving tax cuts that would add trillions of dollars to the US debt, which stands at $36.2 trillion now. That equals 127% of GDP. The package calls for an additional $4 trillion in borrowing. Well, the US 10-year Treasury note hit the yield hit a 6-week high, pushing above the 4.5% level to 4.53, the 2-year rising to 4.05, and the US dollar edging higher as investors await fresh signals that global trade battles will continue to ease. The Aussie trading at 64.2 US cents in Bitcoin, just coming off to 103,500 US dollars. Oil prices, they've eased on data showing US crude oil stockpiles rose unexpectedly last week, prompting concerns of excess supply. Brent crude futures around 1% lower at $66 a barrel. Copper was down almost 2%, iron ore up around 2% to 103 US dollars a tonne. And gold tumbling further, falling to a 1-month low as investors move away from the safe haven to risk assets. US gold futures 1.8% lower at $3,188 an ounce. So to get across what we've seen in the past week, of course, a lot of movement there, particularly in relation to what's been announced between the US and China. I caught up with Ira Epstein from Linn Associates.
Let's go back to April 7th, because that was the time frame that we were getting interest rates climbing towards 5% in the 30-year bond. The market was collapsing in the dollar. The tariffs had just hit. Nobody believed that the tariffs were going to get deals done by the president. And the word recession was everywhere. The VIX shot up over 40. The stock market afterwards started, as you know, its plunge to that low, which was down about 18.5% in the Dow. The S&P. And now what we've done is we've made up all that loss, basically. We went positive for the year again. Now, this is all in no time at all. We have a UK deal. We have, in a short time now, a truce. We don't have any deal with China, but what we have is a truce on tariffs, and everybody is rolling them back and trying to work out how this can all work between the countries. In the meantime, the president, like in America, we had a product called the Fuller Brush Man. It was people that had hairbrushes, and they knock on the door in the 60s, and you'd buy the brushes for them and everything. Well, we call him the Fuller Brush Man because he's gone abroad, and he has suddenly gotten deals that are worth, in theory, a couple of $1 trillion. I mean, this is big stuff that we're talking about. Boeing has been rescued. It's gotten more orders than it ever dreamed it was going to get. NVIDIA's again selling chips now to the Saudis. Who would have thought that? You've gotten rid of the Biden tier plan, and things are rosy for the moment. I think I've answered it.
All right, for the moment. But you make that point, all right, there's no actually concrete deal between the US and China. They've still got to work something out over those 90 days, haven't they? So, particularly given what we're seeing in equities at the moment, is the market right to be so optimistic?
There's two schools of thought. Let me go with the first school that I was in. And that school was this is a bear market rally. And some of the indexes still look like that. To me, the Russell is still very much in that camp. The Dow's questionable. The market that exceeded my thoughts were the S&P, and the Nasdaq is just about to do that. The other thing, Andrew, that happens is as a market technician, and if your viewers ever join my videos, I'm a chartist. And I read a report today. It's not my report. I read one, and they went back into 1990 area, and they looked at the VIX from the times that it's gone and gone from 40 to under 20, and then all the way back, if you will, and got itself back down under the 20 level again. And it's done it 5 times, according to the report, and every single time. The market, when it came back, the market was higher the next week. That's happening already. And then it takes you out 3 months and it takes you out 1 year. So, based on that alone, and I'm not saying it's gospel, and I certainly am saying very clearly past performance is no guarantee of the future. I am turning that I think the next breaks in the market are the buying opportunities. And the reason is I expect more deals. I think that the psychology in America is getting better. We just saw some of the numbers. Can't wait to see the University of Michigan on these new numbers. And the inflation that we were fearful of has been tempered because the big tariffs, other than the ones on China, they've all been delayed. So we're dealing with 10% tariffs in most cases. That's not enough to stop this market. And I think that we've been taken back from the brink and we're friendly again. The negative is interest rates. On the other hand, what interest rates could be saying is Trump's going to get the job done, and therefore the economy is going to grow. And if you have a growing economy, you should have higher interest rates.
Well, also consider, Ira, that I note that Congress has advanced parts of President Trump's budget package overnight, approving tax cuts that, well, what it's an additional, at least an additional $4 trillion in additional borrowing, and that already has the debt at 36 and more trillion, 127% of GDP. I mean, how much of a concern is that?
Okay. First of all, it's the House of Representatives. It hasn't gone to the Senate for a vote. At least I don't think it's passed the House yet. Number two, you are completely correct. It's going to run into a buzzsaw as it gets into the Senate because you're going to get, instead of having hundreds of votes, you go down to can you get a majority of the votes out of 100 different voting people? It changes. And you are correct. How do you do it? They've already taken back, as an example, one of the big elements of fight is the SALT tax, SALT. And it's when you get a deduction for how much real estate taxes you are paying and interest on money. And it was $10,000. And if you live in New Jersey, California, New York, even Chicago, $10,000 in the course of a year doesn't pay for anywhere near it. And then they went in today and they said, well, you'd have to make to qualify, I think, under $200,000. So suddenly the really rich don't get that. And the middle class in America probably doesn't get it either. So there are many things taking place. They want to eliminate or give you a break on the interest on auto loans. Well, that's fair game. Who the heck knows if that's going to pass as well? So what I want to say is they aren't passing anything right away. What you're getting are proposals that are going to get tossed around, and we will see where it ends up. Don't think that what comes out of the House is the end game. It is the first go to see how the Senate views it, and you're hearing senators stand up and say no to a lot of this stuff already.
Yeah, okay. Still a long way to go there then. Ira, now, are you of that view that investors are now buying back into that notion of American exceptionalism? That's been reflected in the US dollar and also, of course, the gold price coming off significantly as investors move out of the safe haven back into risk assets.
Everything moves in cycles. The US was exceptional for a decade. That decade has come and gone with the second round of this president. And now the exceptionalism is the stock market in Europe, could be your stock market. It's not the US. The US is now a place where people don't want to park too much money. If you want to own tech, we're the place to be. If you want to own probably financial markets, we're probably it. But the rest of the markets in America, if you look, they're being dragged along with this deal. They're not the place. And I don't think the dollar's out of the woods yet. I'm nervous about the dollar. You're seeing gold has given back a tremendous amount. And the last time we talked, I told my clients to come out. We had a $3,500 objective, and we've cut down, just on my last show with you, we've been cutting down Bitcoin to a very small position because these markets have gone vertical and vertical doesn't work. And the reason I think Bitcoin took off was Coinbase moving into the S&P 500, replacing Discovery, a credit card company that was bought by Capital One. And now I'm nervous that these prolonged moves are there. Does it mean Bitcoin can't go higher? That's not what I'm saying. What I'm saying is that part of the cycle may have run its course. I think Bitcoin's got a long ways to go to the upside.
Right. Just briefly then, at what point would you be buying back into gold?
I'm not. I'm basically staying right now neutral. I don't think that with 5% interest rates, why do I want to own gold? That bothers me. I mean, I've traded gold now since it came on the board to trade at the Chicago Mercantile Exchange. That's how long I go with it. I was one of the original people in the trading pits in what they call the IMM, the International Monetary Market that the Merc owned when they first brought on the currencies and the metal place. So I've been doing this a long time. And to me, this isn't the time to own gold. Gold's just gone up. It needs to consolidate this. If we're going to have inflation, gold is the place to be. But that one play you just had, that might be it for a while. I'd be very cautious.
Ira Epstein from Linn Associates. Well, let's take a look at where we're likely to be going on the local market on this Thursday. Looking for a negative start to break the rally we've seen over the past 5 sessions or so, with SPI futures off more than 0.4%. Stay with us. We're going to get right across that open in just a couple of minutes.